there's a duty under the insurance contracts, Ken, for people to report losses as soon as possible. And so, generally speaking, it's like within a couple of days of it happening, we want to know about it so we can help you. If you sit on it for a month or two and then it pops up, you got a really unhappy insurance carrier, and that's never a great recipe for a nice result. So bodily injury, definitely turn it. I even say that with cargo too, because you don't know how it's going to develop sometimes. Better to turn it in when we say turn it in for record only. That's the industry terminology, right? So you can turn it in for record only, which means, hey, something happened. We're still researching it. If we think it's going to move forward, we'll get you more information, Mr. Insurer and its company, and you can assign an adjuster to then handle it for us.
So the conception or the idea or the thought, the fear that if I turn this into my insurance company, my rates are going to skyrocket versus I can handle this under the table and my insurance rates won't go up. I mean, is that true or is that not, or is that a misconception?
I think it's a misconception. Just because you turn it in, you can always close it out for nothing paid, and they're not going to hold that against you, right? Yeah. In fact, my argument back to the insurance companies all the time is this is someone that understands the partnership. Like, this is the kind of client we want because they're telling us about something right away. They're able to research it. They were able to take care of it. They didn't, drag us into it or need us because they realized, it was a small amount of money they paid out of pocket. Like, that's a great partnership. I would rather have that kind of client for the long term than anything else.
Does someone where does it come into, where's the line drawn between I'm going to handle this myself versus insurance fraud? And what sort of things have you seen? Where's that dividing line between misconception or I didn't understand and outright insurance fraud?
Yeah, and I would say not so much fraud, just violating your insurance contract, and then it gets really ugly because what you're doing is taking away the ability of the insurance carrier to do the job that they've promised you they do. So they get a little testy when you do that, and by a little I mean a lot. They want to control the scenario. Like, their stance on this is, hey, Ken, we do this every day. Let us handle it. We're smart. We know what we can do with it. That's the biggest exposure, right? Is that you're going to kind of meddle in it and try and make it go away. And in the process, it's going to keep climbing in terms of cost and severity. And that's not a win for anybody. Now that will get held against you when it comes time for renewal, right? Because now You're not a partner, you're actually an adversary. And it's not true, but it comes off that way. So I think that really you've got to go back to your broker, whoever they are, and say, hey, this situation happened. What do you think? And we have those conversations all the time. And I would tell you 75% of the time, it's hey, look, see what you can find out in the next day or so. Let's reassess it. Then let's turn it in for record only and let's see where it goes and kind of adjust it from there. So,
yeah, I think, in the courier industry, bringing it all back full circle, so many people get into this industry. We get calls all day long from people starting their new courier service all day long. I mean, our phone, that's, one of the number one things. And they'll ask about insurance. And again, they heard from some social media influencer that they could do these deliveries on their own personal insurance. Don't tell your insurance company. They'll literally tell them, don't tell your insurance company you're doing this for a living. So what does it look like if a courier does that? They get into a terrible accident and then they have to, basically they're liable for everything, all the damages then personally, civilly, or?
Yep. Yeah, absolutely. Right. So they're now have basically mortgage their entire life earnings on that. And I think that's the blessing and the curse of the space is you can get into this with very small amount of money and cash flow. And, the barrier of entry is low. Right. And we've both seen a ton of people build some really incredible, lucrative businesses starting from scratch. So that's great. Cool. The potential is there. I think the risk is what you just said. If you do it and you don't take some of the exposure seriously, you're putting yourselves in harm's way unnecessarily, right? And yeah, it's not fun to spend the money, but I'm going to tell you something that we say in our space all the time. When there's a claim, You know what the first question is from customers? And I'll tell you what it isn't. It isn't, what did this cost? Right? What did the insurance coverage cost? The question is always, is it covered? So
Oh,
you've got, you want to
yeah.
make sure that what you're buying and spending your hard-earned dollars on is actually going to respond if there's a loss, whatever that loss is. The coverage is paramount. I'm not downplaying the spend because it is significant, but the spend has to be justified by the coverage. And there's a lot of, in this space nowadays, there's been a lot of attention put on it, especially since COVID, when it blew up and it became, it became very popular to be in the final mile space, where other insurance markets that cater to different transportation sectors started to write policies for the courier space. And our stance is they did not understand how dynamic and unique the courier space is and how business is transacted. And their policy forms are pretty terrible compared to those that are more boutique and really understand the space. And we're talking about saving minimal dollars and sacrificing a lot of coverage potential, which is, if you're on the wrong side of that, boy, the savings really doesn't feel good because you just had a loss that is massive and uncovered.
Interesting. Can you think of a situation where someone thought that they were properly covered, but they were way undercovered, and they
Yeah.
found out too late after the incident?
Yeah, and there's a particular insurer on the hired and non-owned side of things who has very restrictive driver requirements. Okay. And what they say in essence is, hey Ken, we'll sell you the hired and non-owned coverage, we'll protect you. But if one of your drivers at the time that they have a claim has a major violation on their driving record, we're not covering you. Now, what's your first question, right? How the heck would you know what the driver has on their driving record except for the moment in time when you run a motor vehicle record for them?
Right.
Are you going to run a motor vehicle record every day? No.
Probably not. No.
That's so cost prohibitive, it'll never happen. There's even services now that constantly monitor, right? But still, you're paying for that across your whole driver population. I don't know many customers of ours that are doing that, or people in the space in general that are doing it. So that's a very risky way of putting your whole company's existence basically in the hands of every driver you hire, because you'll never know what's happened along the way. And that's frustrating because that doesn't have to be that way. So to see that kind of language in the policy is, to me, that's almost, I won't say bad faith, but that's a really terrible way for an insurance company to try to control their risk. And they're basically selling you something that's, could completely never respond.